Hello, fellow investors. I'm Ben, and this is GVD Investing, where I break down the latest stock market news, analyze stocks, and share my personal investment journey in hopes of making us all better investors.
In this video, we'll take a look at my favorite Canadian growth stock for the start of 2021, a company that I think is currently grossly undervalued given their opportunity to capitalize on the accelerated economic and consumer shift we are witnessing in response to the global pandemic. I will take a deep dive into the company, give my full bull thesis on why I decided to invest in the business, and where I see them going over the next few years. Let's get to it. In 2020, in response to the global pandemic and resulting lockdowns, we have witnessed a transformation in spending habits in the economy I don't think many people saw coming nearly this fast, though many people did predict these changes would eventually come. In less than 12 months, trends and concepts that may have taken many years, if not decades before becoming mainstream, have been thrust upon us and are now standard operating procedure. I'm honestly not sure if we'll ever go back. As has happened many times throughout history, innovation and technology are fundamentally changing how humans live day to day all over the world. In my opinion, it seems like we are at a point in history similar to the early 1900s when we transitioned from horseback to automobile and the resulting cultural and industrial shift. Suddenly the world became more connected. Industry exploded. Feats that seemed impossible became daily tasks. Over 100 years later, it's happening again. The disruption is widespread. Whether we were ready or not, the pandemic has forced millions of people to change their daily routines. From children attending school at home, to parents spending hours in Zoom meetings from the comfort of their own home. From elderly people having to learn how to use technology they had probably never considered using before, to doctor's appointments now being available over the phone. And for the last few that had yet to sign up for Amazon Prime, the thought of ordering something online is now way more enticing than waiting in line at the grocery store. In what seemed like the blink of an eye, everything has drastically changed in 2020. If we pop over here to take a look at this article from the Wharton Business School at the University of Pennsylvania called 7 Ways the Pandemic Has Accelerated Digital Innovation and Adoption, I think it does a pretty good job of summarizing most of the drastic changes we have seen this year. The article starts off with a quote from the ancient Greek philosopher Plato: "Necessity is the mother of innovation." I think this is a very important quote and something most people forget during uncertain times. Since the first humans crawled out of caves, we have faced existential threats. The reason humans are still here and now the most dominant species on the planet is because we have learned to adapt and innovate when faced with those threats. We learned to domesticate plants and animals to feed large groups of people while at the same time providing us protection, labor, clothing, and transportation. We went from nomadic berry gatherers that feared large expanses of water to a species that now looks back on our planet from space. We built boats to cross oceans. We invented cars and trains because horses weren't fast enough and shat all over our cities. Vaccines and medicines to treat or cure some of the world's deadliest illnesses, viruses, and diseases. Humans are master problem solvers. In the face of danger or widespread catastrophe, we have always learned to innovate and adapt. Sorry for the ramble. Let's get back to the article. It continues by saying, "That's surely evident during the pandemic, which has driven technology, innovation, and adoption by companies, seniors, and many other groups. In today's uncertain times, transformation is required to stay relevant. More than 100,000 small businesses have already permanently closed, Axios reports. Many big-name brands have filed for bankruptcy, including J. Crew, Gold's Gym, Hertz, and Neiman Marcus, among many others. With various stay-at-home orders in place since March, how businesses operate and how employees interact have changed drastically. Here are 7 emerging technologies and innovations that have become popular during the lockdowns, with many developments that may be here to stay." So the first and second one are pretty similar. It's teleconferencing and digital workplace. So a lot of people are forced to work from home. Kids are forced to take school at home. It says here, instead of canceling big in-person events, many brands have moved them online using teleconference tools. Forbes reported in May that virtual events were up 1,000% for a virtual platform called Six Connects, which has hosted over 52,000 events. Zoom, as many people know, has been really important throughout this time, making people be able to work from home, do meetings from home, take class from home, even just communicate with your family members and have holiday dinners and stuff like that. A lot of people are doing that nowadays. According to a May 2020 report by Global Market Insights, video conferencing market size is anticipated to grow at more than 19% compound annual growth rate between 2020 and 2026. Another massive industry that's been hit really hard is the restaurant industry. Various states and provinces have put bans on indoor dining, forcing many small businesses to adapt to survive. Statista reports that year-over-year decline of seated diners in the U.S. was 65.5% in July 2020. Not being able to eat inside restaurants has caused a surge in meal delivery. According to Barron's, spending on meal delivery services in April 2020 was up over 70% year over year. Restaurants are innovating to retain customers and attract new ones, even though during this tough time for the hospitality industry, using strategies like new menu items and easier online ordering. And even like restaurants and grocery delivery has become a lot more popular, which is similar, but I guess a little bit different, because most people don't really want to go to the grocery store these days. It's kind of one of the riskier places to be. So if you can get your food delivered to your house, a lot of meal kit programs and just even normal grocery delivery has taken off. Contact-free groceries have gone up. According to Supermarket News, nearly 80% of U.S. consumers have shopped online for groceries since the lockdowns in March. With emerging evidence about the risk of indoor spread, many states still not requiring masks to be worn in public, ordering groceries online is a convenient and safe way to shop. Customers can find exactly what they're looking for quickly without having to potentially expose themselves to carriers. Telehealth is also a new idea. I guess it had been around before, but with the lockdowns now, it's become a great way to do easier, more simple doctor's appointments. Obviously, you can't do anything drastic over the phone, but it's for simple appointments. It's a lot easier than having to go wait in line and actually go in to talk to a doctor and risk getting sick. Online workout classes and like yoga classes, Peloton, stuff like that has been really important. I'm interested to see how this one ages after the pandemic. How many people will just go back to the gym rather than work out from home, because a lot of people like to be in the community setting of being in a gym, with meeting people, talking to people, socializing, that kind of thing. And then supply chains have been hit all over, not just supplies from China, but supplies globally. It's harder to move stuff around, harder to ship things, restrictions, manufacturing is down. Certain inventory on certain stuff has increased a lot, whereas other things that used to be purchased a lot aren't being ordered as much. I think they're forgetting an eighth one here, which is the switch to renewable energy and EV cars. I think that's kind of come on a lot faster than people expected. The lockdowns seem to have heightened the awareness of climate change. Seeing the impacts of what a pandemic can do globally, I think, has opened people's eyes to what could happen if we completely ignore climate change, and if it does prove to be as serious as some scientists are predicting. The article just finishes off by saying, expect more innovation during the pandemic. To sustain a solid economy during a global pandemic, businesses must embrace new models, services, and operations. Digital tools can support these initiatives. An increasingly stay-at-home culture, at least until a vaccine is developed, means consumers' needs are changing. Staying in business today requires evolution using technology, which also means brighter developments for the future. The Canadian growth stock I'm really excited about addresses 3 of these issues: restaurant takeout and delivery, grocery delivery, and supply chain issues. And that company is GoodFood. The stock is available on the TSX under the ticker FOOD.TO. In my opinion, given what this company offers and where the market is sitting right now, I think this is one of the most undervalued growth stocks available in Canada and the US. I think the potential for this company is huge. Because as I've said, and as you all know, many things have changed over the course of the past year, including the way the grocery shopping gets done. If you're one of the many people who are still a little wary of heading into grocery stores, you'll be glad to know that picking up a last few minute ingredients or snacks to fill those quarantine cravings is now easier than ever. All thanks to GoodFood. GoodFood is the #1 meal kit delivery in Canada, and they've recently just started offering a grocery delivery service as well. The company offers ready-to-eat breakfast meals, which include ready-to-blend smoothies and other breakfast items, prepared meals, cooked meats and sides, salads and soups, and private label grocery items in various categories, such as bakery, dessert, meat and seafood, drinks, pantry, produce, snacks, dairy, and kitchen essentials. They offer a once-a-week subscription service where we deliver all the fresh ingredients you need to make delicious meals at home in exactly the right proportion. They've designed their experience to teach you fun new recipes, discover new ingredients, some that can be hard to find, save prep time, and also reduce unnecessary food waste. By cutting out the middleman, they're able to offer fresher, higher quality food than traditional retailers at up to 15% lower than supermarket prices. And in certain regions, they offer same-day and next-day delivery, which is huge right now given the trends going on with food delivery, restaurant delivery, and grocery delivery services. You get to customize your weekly meal plan from the type of basket you receive, easy prep, classic, vegetarian, clean 15, or family, the number of recipes and portions you want, to the type of food you're interested in. Every week you can choose from 18 unique recipes created by the Good Food chefs and inspired by the freshest ingredients. And all of this goodness gets delivered right to your home for free. Plus, if you ever want to skip a week, you can do that too. And the best thing is Good Food is 100% Canadian, meaning that when you support them, you're helping support local farmers and businesses, which is really important right now given the troubles with supply chains and the growing importance of supplying food and, well, lots of other stuff locally too, but food especially because it's mandatory for our survival. With current consumer trends, market needs, and economic conditions, I can't think of a more on-point company than Good Food. They're a subscription service. They offer meal kit delivery and grocery delivery, which is huge. Meal kits are huge and grocery delivery is huge right now, and they offer both. They're healthy food and vegan food, which are both really trendy. They have lots of options and variety. It localizes the food supply chain, helps local farmers, and reduces food waste. And it works well in a pandemic as it reduces the need to go to the grocery store and avoid potential exposure to getting sick. So you would think with how hot some of these food stocks have been, like Beyond Meat, Very Good Food Company, and Tattooed Chef, that Good Food would also have taken off, but in my opinion, they're drastically undervalued still. Their stock hasn't seemed to garner the same attention as a lot of these other food companies. So let's take a look at their fundamentals and I'll explain what I mean. Good Food stock charts are some of my favorite I've ever seen. In the last month, they've gone up 44%. In the last 6 months, they've gone up 145%. In the last year, they've gone up 290%. And in the last 5 years, they've gone up almost 1,000%. So you would think after looking at these stock charts, okay, this stock has to be crazy overvalued, right? It's way too expensive. But no, if you go over and take a look at their price of sales, it's still only 2.49. To have a price of sales of 2.49 for a growth company that's growing that fast and has already gone up 1,000%, but still only has a price of sales of 2.49. Even if their revenue just stayed where it is now, even if this company just catches a bit more hype behind it, they could easily quadruple their stock price and still be less expensive than a lot of these other growth stocks. I find that very attractive right now. The fact that they've really demonstrated consistent growth. It's not the most volatile stock, especially for a growth stock. It's fairly consistent growth anytime you look. 6 months, 1 year, 5 years, great returns. And the fact their price of sales is still only 2.49 bodes very well for this company. They've been profitable the last 2 quarters. If we go over here and take a look at the quarterly, they were able to pull in 2.49 or 2.79 million in earnings in Q2 and 1.5 million in earnings in Q3. Even during the pandemic, they've been able to be profitable, and growing. In my opinion, I really think this is one of the best growth stocks in Canada anyway. There might be more attractive ones in the States, but I haven't been able to find one in Canada that has this much upside potential, has shown that sort of growth, but is still so cheap compared to other growth stocks. They're a little high compared to their 50-day and 200-day moving averages, but they could easily warrant a price of sales of 20 if you look at other growth stocks and where they're sitting. That wouldn't even be unjustifiable. It's hard to know where this could go, but I think if this company gets some momentum behind them, their stock could absolutely go to the moon. Their market cap is still less than $1 billion at $711 million. They have a great price of sales. The revenue grew 85% quarter over quarter, and they have more cash than debt. So they had earnings beats almost every time. The last 4 quarters they've had beats. The revenues almost doubled every year. They've gone from 20 million in 2017 to 70 million in 2018 to 160 million in 2019 to 285 million in 2020. And if we take a look here at some of the analytics, their sales grew 63.7% in 2020. They're projected to grow 33% in 2021, and then another 22.7% in 2022. They had earnings beats in every quarter, 25%, 45%, 200%, and 160% in the last 4 quarters. And analysts have them right now, 8 analysts I think, have looked at the stock, and they have it between a strong buy and a buy at 1.7. The average price target on the stock is $11.72. So it's getting a little bit high now, but even still, given their growth projections, current sales, and the extremely low price to sales ratio, I think this stock is grossly undervalued. I really struggled to find anything I don't like about this company. If I take a look at the investor presentation, the future looks even more exciting. Okay, so the first thing I noticed that I really like is that they've updated this with updated stats post-pandemic so that you can get an idea of where the company's headed with the current market conditions, which has actually really benefited this company. They expect the online grocery delivery market to grow 21% annually between now and 2023, doubling from roughly 1.5 billion to 3 billion. These stats are based on $124 billion industry defined by Statista, an online penetration of 1% based on GD/CanadianGrocer.com. GoodFood built the capabilities and differentiated strategy to benefit from the accelerated shift to online grocery and is poised to cement its place as a leader in online grocery. Because of the pandemic, they've now changed the outlook for online grocery, and they expect 56% compound annual growth rate in the Canadian online grocery market, more than 3 times the previous forecast. The market's expected to hit at roughly $25 billion by 2025. And after doing some polls, this is really important, asking customers, have you purchased groceries online? In 2015, only 15% of customers said yes, they had. In 2017, that increased to 25%. But as of March 2020, 55% of people said they'd order groceries online. In further questions, will the pandemic lead to permanently increase your willingness to purchase groceries online versus in store? Over 54% of people said yes. If you have purchased groceries online, do you anticipate to continue doing so? In 2015, 67% of people said yes. In 2017, 77% of people said yes. And as of March, 90% of people said yes. If you grocery shop online, has the pandemic resulted in an increase in their online grocery spend? And over 64% of people said yes. They have 7 facilities from coast to coast, 6 meal plans with 35 different weekly options, over 400 GoodFood branded products, 30 unique branded breakfast products, and over 4,000 products in total, with up to 15% discount to national brands delivered right to your home. They recently launched GoodFood Wow, a value proposition. The GoodFood Wow service offers unlimited same-day and next-day delivery, no weekly meal kit subscription. The minimum order is only $35. It comes in environmentally friendly packaging. They add new products every week, and they offer a discount to other branded delivered options. The growth in the company is extreme. In 2018, they only had 89,000 active subscribers, and as of Q4, they had 280,000 subscribers. It's actually more than that now. I think they're over 300,000 active subscribers. Revenue's grown in 2 years from 85 million to 310 million. Gross margin's grown from 22% to 33%. Cash on hand's grown from 24 million to 107 million. The monthly website visitors has grown from 590,000 to over 1 million. And they've grown from 800 employees to 3,100 employees. They're operating in a $165 billion total addressable market with currently low online penetration. One of the most important things is they ended 2020 in a strong financial position with $107 million of cash on hand. And they were added to the S&P TSX Small Cap Index and selected to the TSX 30 as a top 30 performing stock. They have 2 fulfillment centers in the GTA. They're opening up and ramping up one in Vancouver and another one in Montreal. They've expanded their SKUs from 40 to over 400. And as I said, they've launched GoodFood Wow and Flex to provide stronger value propositions to their customers. If we take a look at their key investment highlights, GoodFood has delivered 20% average monthly growth since the fourth quarter of 2015. Continued growth has led to achieving profitability, demonstrating strength of the business model. They currently own between 40 and 45% of the Canadian market share, which is huge for an online service, especially a subscription service. They've proven ability to execute growth and operational plans since inception, leveraging existing subscriber base and brand to enter overall grocery market ripe for disruption. They're established, strong, well-recognized Canadian brand, poised to benefit from the fast-growing adoption of online grocery industry. They have a national network of purpose-built capacity exceeding sales capacity of $1 billion. They have dedicated management team executing at high efficiency with 40% ownership. The co-founders, respectively, CEO and CEO president, built and grew the company from inception. So it's a founder-led company, which is always good for a business. If we take a look at their financials, revenue is growing consistently from 2016 all the way to 2020. Profits increasing. EBITDA is increasing, and cash is also increasing. Pretty much everything you want to see financially is growing rapidly for this company. The impact of the pandemic and how they've adapted to it. They've heightened already strict hygiene measures to ensure safety of employees and members. They've increased their footprint to 7 facilities to provide runway for growth, hired over 1,000 new employees, expanded grocery products to fulfill demand. They increased inventory and added more SKUs, and also donated meals to frontline healthcare workers. One thing that's extremely important is that 94% of their revenue comes from subs, with people who have ordered 3 or more times. So it's not just one-time orders and people going away. Most of their revenue comes from people who have subscribed and keep coming back and reordering. GoodFood is committed to a green vision, which is extremely important given everything that's going on these days and the trends towards more environmentally friendly businesses. They now offer a new reusable box aiming to save millions of single-use packaging across Canada. They've launched paper packaging for same-day local grocery orders, eliminating millions of boxes, liners, and ice packs. They launched plant-based packaging for select RTE products, cardboard box pickup in Canada's major cities for recycling, cutting down food waste by just-in-time inventory, delivery of pre-portioned ingredients, and giving away leftovers to employees, minimizing transportation by sourcing fresh, local, in-season ingredients. They also contribute to a nutritious meal for a child in need at school for every GoodFood box purchase, and they're committed to reducing plastic inside the box by 50%. Did you know, on average, grocery meal greenhouse gases are 33% higher than meal kits? Overall, this company is just absolutely killing it. They, in every way, they seem to be so on trend right now with food, the green vision, subscription service. This is probably the only negative thing about the company, that previously they've had kind of a seasonal business where in Q4 they typically don't do very well, which Q4 for them is actually June, July, and August. So they seem to struggle a little bit in the summer months, but if you take a look at their numbers from this year, they've actually done quite well through Q4. So hopefully with the changing trends in grocery shopping next year and for future years, they can do better throughout the summer months. And really, if that's the only negative about this business with everything else they've got going on, I think they'll be able to figure that out. And lastly, which I think is probably one of the more important things to look at, is how successful this company is already in their overall saturation of the market. They have a 40% market share of the home meal solution industry in Canada. They're by far the largest meal kit provider. They're actually larger than a lot of the grocery companies in terms of website monthly visits. If you look here at the website traffic, GoodFood is the line in blue. And as you can see, they have consistently been the most visited website of any of the meal kit solutions offered in Canada. And that's GoodFood, Chef's Plate, Cook Kit, and Miss Fresh, and HelloFresh Canada. HelloFresh is probably their biggest competition. But if you look here, they're actually quite a bit ahead. Over 250,000 more people a month look at GoodFood than HelloFresh. They're ahead of Sobeys, Loblaws, Chef's Plate, and Grocery Gateway. So, I mean, this company is doing really, really well. The only companies ahead of them in terms of grocery visits are Metro, IGA, and No Frills, which are 3 of the largest grocery stores in Canada. So if that's where they're up and that's who they're competing with already after 4 years, the potential for this company is huge. They only have 300,000 active subscribers in a country of 35 million people. So even if they can saturate 10% of the market and access 3 million people, that's still a 10 times increase in their subscriber base from where it is right now. They have facilities all across the country. 2 out west, and another 5 here in central Canada, 2 in Ontario and 3 in Quebec. And the last part here just discusses how they are grossly undervalued in comparison to their peers. Their market cap compared to grocery stores is ridiculously low, and even in comparison to other meal kits, HelloFresh is currently valued at 7.8 billion euros, and GoodFood is only valued at 606 million Canadian dollars. So given that they're actually doing better and have more traffic, more subscribers, and are a larger market share, GoodFood is extremely undervalued right now. Their market cap actually isn't 606. It's gone up since this investor presentation was made. It's over 700 now. Might actually be closer to 8. But even still, even at a market cap of 800 million, they're still way cheaper than HelloFresh and most of the other grocery stores, all of the other grocery stores. So all in all, I think GoodFood is the most exciting growth stock in Canada right now. I think they're wildly undervalued. I think the prospects for the future are immense, and I'm extremely excited to hold this company. So let's quickly just take a look at what I'm doing and my current position. So I bought my first shares on December 3rd at $8.45, and then added a few more times throughout December, and now I have 100 shares. I can't take the credit for finding this one. I have to give the credit to my buddy Greg. So if you're watching this, thank you, dude. This is a great company. So yeah, I've got 100 shares at $8.60. I'm actually doing quite well. It's up 40%, but I plan to add a bunch more to this pretty much anytime there's a dip. I'll just slowly add to my position now anytime it pulls back. So if it fell to 10, I'd buy a ton. If it fell back to in the 8s, I would absolutely load the boat. But even if it goes up, I'll just continue adding slowly, because given their opportunity for growth and their extremely low valuation, I think there's a ton of room for growth. Even a $20, $30 stock price, given their current revenue, wouldn't be unreasonable. But for now, just kind of slowly adding to the position as it goes up, and looking forward to see where this one goes over the next few years. So I think that's a wrap, ladies and gents. If you've made it this far, thank you so much for sticking with me this whole time. Please tickle that like button. And if you want to follow the journey and be notified of future videos, please smush that subscribe button. Thank you very much. Until next time, be safe, wear a mask, and invest wisely.